Kathryn Petralia. I'm the co-founder of Kabbage. We help small businesses manage their cash flow. And as Zach mentioned, we were acquired by American Express in October of last year.
Great. So deep understanding of what SMBs need in terms of cash flow, right?
Absolutely. We've been doing it since 2009. And we got our start with lending with the focus on automating access to the smallest businesses, access to capital. Started with eBay businesses, which was sort of I guess, not as respected at the time as it became, I guess, over time. But by the beginning of the pandemic, we're serving all types of businesses and had deployed, many billions of dollars in capital to hundreds of thousands of small businesses.
Amazing. So let's talk about those small businesses. Like last year was incredible. I know you and I have spoken about this a couple of times, but incredible, challenging environment. A lot of new business starts, record number, move to digital as well. And companies had to pivot. They had to come up with new strategies, new products, new services. Where do you see SMBs now? Where are we in sort of the cycle today?
It's an interesting time for small businesses. As you mentioned, tons of new business starts. And there's this sort of interesting thing happening where some businesses just performed amazingly well during the pandemic, just depending on their geography, depending on the industry, their access to technology and their ability to keep serving customers. And then some businesses really, really struggled. A bunch of them, as we know, went out of business. So it is kind of a tale of two economies for these small businesses who many of whom are still struggling to find their way, I would say. But what's been really exciting is the continued adoption, the rapid adoption of digital technologies, especially in financial services, which is obviously what we care about a lot. And we're seeing that it's actually helping businesses expand their markets and make managing their cash flow easier and take less time, which is our goal, is always to save our small business customers time.
Amazing. So one of the things I think happened last year with PPP was it had the potential to drive a wedge between SMBs and their banks, and maybe erode some of the trust that they've built up with them. So banks have a long history, though, of building trust and encouraging trust with their customers. So I guess I want your perspective on whether PPP was a watershed moment that shifted the trust maybe away from banks to fintechs more. Are fintechs actually catching up on that department?
My co-founder, Rob, has said this several times, and I really love it. Basically, that PPP was fintech's moment in the sun, so to speak. We were able to, grow and rise to the challenge and serve small business customers in ways that banks had a hard time doing simply because of their lack of automation. We discovered that, and I might get this number a little bit off, but we were the second largest PPP lender at Kabbage during the first round of PPP loans, behind Bank of America and ahead of Chase. And we had one employee for something around 800 employees that Chase has. Wow. And so I think that just speaks to the power of automation and technology. And because we are digital native, we always have been automated. We've always used real-time data to make decisions. It made it easier for us to adapt in that environment.
So I guess it speaks to maybe a deeper issue of what's going on. Do you think the definition of a bank or the role of a bank is changing? What do you think about that?
Well, when you think about it from a small business owner's perspective, they don't wake up in the morning and say, oh, I can't wait to have a relationship with my bank. I really love the bank and go into the bank and doing stuff in the bank. Like, that's not how they think of it. They think of it as, I need to accept payments. I need to pay my employees. I need to, manage my invoices. I need to, manage my investments. All the things that business owners need to do, they think of it in those types of terms. And I think what fintechs have done that is a little bit different is they focused on these specific services and needs that businesses have, because they're all unique, of course. But when we think about cash flow, it's really all about the movement of money through their business. So the treasury function. But for most small businesses, and I have to take a moment just to mention what we think of as a small business, there are 30-ish million SMBs in the US. 90% of them have fewer than 20 employees. 80% have fewer than 10. So the massive small businesses are really quite small, and they have very different needs than a business that has 500 employees.
And so what's Kabbage's target when you look at your target audience? What size
Kabbage is
business company?
Kabbage has historically targeted that under 20
Under.
employee customer population because they're simply less served. It's just harder for a bank to understand how to serve them. It's not cost effective for them to do that. Cost it from a lending perspective, it costs a bank the same amount of money to make a $50 million loan as it does a $50,000 loan. So, it's really hard to justify, allocating resources, and not because they're bad guys, it's because it's just hard to do.
So do you think banks' relationships with SMBs has changed through this time
I
period?
think we have seen that, and there is this, and I don't know that I would necessarily credit, I hate to use that word, the pandemic with this, but certainly there has been a change in trust levels. There is a McKinsey survey where they reference the questions they're asking about trust with their institution. And what's interesting is fintechs are found to be easier to use and more convenient. Banks still have a little edge on trust, but fintechs have an edge on rates, on better digital experiences, and customer experiences. So I think that's a really important distinction. And I think what's interesting is that we are really, as fintechs, closing that trust gap that is perceived to be the case. And um, we can talk more about banks, I guess. But the other thing I would mention about banks is, every fintech works with a bank. Almost all fintechs work with a bank to move money, because at some point, money has to move into a bank account. But what's happening is fintechs are taking over the customer relationship. And I think that's a really important change, because that is where trust lives. And that is where activity and engagement lives, is in that customer relationship. So the more these products are unbundled, which is, a term that banks don't love, while still these core transactions are running on their pipes, they really begin to look like more of a utility than like an institution that has a deep relationship with their customer.
So I want to talk now more about Kabbage, which is a great topic. It looks to me like Kabbage, you added banking services as well. Amex made the acquisition, so it looks to me, at least as an outsider, that there's a super app strategy there, that I can imagine a wide variety of services and products that you offer to small and medium businesses. So um, I guess, are you building a super app? Do you use that language? Is that sort of take us behind the scenes? Is that something that you guys talk about?
We do. We talk about super apps a lot because you're seeing it obviously in the market, and you're seeing it right in our space. With other fintechs that are covering all of the parts of a customer relationship for a small business owner. So I think that is how you really define a super app. It's, do you have an end-to-end relationship for some particular segment of whatever those services are? In this case, it's banking services, and in our particular case, it's cash flow. Because small business owners, they have a different view of cash flow often than, somebody with a master's degree with a concentration in finance. For a small business owner, they want to make sure they have the money to do the things they want to do in the next week or month. That's really how they're focusing their time and energy.
Was there an evolution, I guess, amongst Kabbage management, where you sort of evolved from thinking as I'm a lender of money to I'm actually an enabler of cash flow? Was there sort of like a moment where that occurred?
Yeah, there absolutely was. And there were a couple of things I think that drove that. One of them is we realized that our customers really, they didn't come to us because they wanted to borrow money. And this was several years ago. They came to us because they had a need. They had something they wanted to accomplish. Sort of, I love this metaphor. Kudos to Paul for this at Kabbage. But the customer wants a quarter-inch hole in the wall. They don't want to drill. They don't want a drill bit. They don't want to hire somebody to do it for them. They need the hole. And so the same thing is true with us. What they need is to do something that requires money. And so I think that's how we think about the customer need and the customer relationship. And so from our perspective, we wanted to make it easy for them. Our customers, we thought, were borrowing too much, keeping the money for too long, and paying too much in fees. So we thought, we have a lot of data about these customers. How can we help them understand when and how they actually need to borrow, even though our product was a line of credit and they were able to access it whenever they needed to, which was more flexible than most of the options they had. We just didn't feel like it was enough. And we realized that as competitors were moving into our space on lending, we needed to move into the movement of money space, whether it's accepting payments, whether it's bank accounts, whether it's invoicing and bill pay. All of these things needed to come under one roof just to make it better for the customer. Because if it's better for the customer, it's always better for you. It's not altruism.
Totally. So can we talk about the Kabbage product portfolio?
Sure, of course.
Yeah.
So we launched payment processing maybe 6 months before the pandemic hit, and had been building a card product as well as a checking account product. The checking account product we launched last August or September. And the card product, as you might expect, American Express is an amazing card company. So we're bringing that product into our ecosystem now. But what's important about payments, and it might surprise you, of the hundreds of thousands of customers we serve, many of them were still using a payment processor from like 10 years prior. They weren't
Really?
necessarily rapidly adopting those new technologies, and they didn't really have a reason to unless there was some benefit. When you pull all these things together into an ecosystem, then the benefit is really amplified, because you're able to only go to one place. You're able to get a benefit like instant deposits of your processing funds into your checking account, or instant deposit from your line of credit into your checking account. These are all these great things that you can do when you have a whole ecosystem working together on behalf of the customer. So we also had an invoicing and bill pay product built in. We've subsequently relaunched the checking account as well as the line of credit, and we're in the process of relaunching more products as we, continue to work on our integration with American Express.
I guess looking forward, or I guess, can you take us behind? How do you determine what goes into the product set and what doesn't? You talked about sort of being, if it's good for the customer, it's good for you. But how do you determine exactly what goes there and where you decide not to participate?
That's a great question. I think for us, it's all about what is day-to-day cash flow management for a small business. What are the tools they need to do it? If you look at something like payroll, that's a way to spend money, but it's not necessarily, other than how much do you have to spend, delivering payroll isn't necessarily a core competency for cash flow management platform. Another example that might be insurance. Insurance is a financial product, but it's something you buy, no different than paying your rent, or if you're a restaurant, buying napkins or whatever the things that you're doing. So we're trying to keep a core to what is that system that moves and manages money for a small business owner, and things that you can improve in that core. So not there are lots of partnerships we could have with companies that provide those other services, but they're not core to the ecosystem.
And has being acquired by, or how has being acquired by Amex influenced or informed your future product plans?
Well, I think the card example is a great one. We had built a card product that we were ready to launch in, I think, March of last year. And we instead put all of our efforts into PPP for a number of months, which was the right decision for us and the right decision for small businesses. So that's a great example of something where, there's so much expertise. American Express has best in class, fraud tools to help manage, card and transaction related fraud. It would be silly for us not to take advantage of that somehow. So I think those are some examples where they have great expertise. Also, tons of customers, a very well known and trusted brand with small business customers and consumers. So I think that, we sort of look at what do the two ecosystems bring to the table. In the last earnings call, Steve Squarey did mention that, Kabbage is going to be the landing point for all small businesses. Their goal is to have a fully integrated, platform that allows customers to seamlessly move from, one tool to the next within the ecosystem. And that includes all of our collective products for small businesses.
Kathryn, I want to go back to something you said before about how some of the fintechs are owning the customer relationship. And I guess the other side of that coin, which is the banks sort of being behind the scenes. So do you see that as almost as an evolution towards banks being more of a utility?
I do. I do. And there are a number of studies that sort of, or journals, publications, whatever, that support that theory. And you're seeing it play out. And they may take a toll along the way, which may be great for them, especially for like the money center banks. But I think when you think about their actual ability to have a relationship with the customer, it makes it harder for them. I mean, banks really rely on cross-sell in order to generate additional revenue, because checking accounts don't really generate a lot of revenue for banks. transaction fees do. But then, as you may have seen today, now the Cash App is able to be used at Square merchants. The Cash App is used a lot for crypto trading. So there's like a seamless movement of money across ecosystems. And I think there's a risk even that those financial transactions get taken out of those utilities because of the lack of interoperability and the lack of, frankly, appealing to consumer and business demand.
So what would you recommend to a bank that hasn't necessarily transformed itself into this convergence concept? Like what is a bank to do, I guess, if they're behind the eight ball here?
I think it's really hard. I think a lot of it probably for most banks is around structuring the organization. How do you think of your customers? At the end of the day, you're a bank. You're really serving two constituents. You're serving businesses and you're serving consumers. And so structuring your organization to effectively support those groups and to provide alignment on incentives and to provide autonomy on making business decisions, with, of course, the appropriate level of controls and compliance and audits and all of those things that are necessary for financial institutions. I think a lot of it is about structure. I think the other thing is about incentives. And I mentioned it a second ago, but I think at most financial institutions, it's the incentives. Everyone has an incentive to say no to something. And there aren't a lot of people who have an incentive to say yes to doing something new. And so changing the alignment to allow testing strategies so that, it's possible to see if a product will fit in a market. I think in expediting those testing strategies, those are things that banks can do to try to rapidly get there. Another way to do it is through acquisitions. And you see that from time to time, American Express is a different type of financial institution. It's not, your typical, kind of big money center bank, even though American Express is a bank. So I think we probably operate a little bit differently than most traditional institutions. But I think just the structures are so complex, and it's very hard to know how to get something done quickly. I would start with looking at my structure and figuring out how I can flatten it, how I can simplify it, how I can do it with fewer people.
I've heard some executives describe this. We talk about a lot in the industry about legacy technology, but they talk about legacy thinking, which is sort of the incumbent sort of position not to do something. And it sounds like there's an imperative to make a change right now from what you're saying.
I think there is, and every big bank in this country is hiring consultants like crazy and spending millions of dollars to have them come in and tell them to do things. But ultimately, it's up to the leadership of those institutions to make hard decisions and to move in a direction. Because if you're not moving in a direction, that's worse than going in the wrong direction.
Well, we haven't seen a ton of acquisitions yet. You pointed to that as maybe a future path for banks. That may have to do with an intransigence. It may have to do with valuations being too high for a lot of banks. I don't know, but do you think partnerships are a way forward? I guess an easier way forward for banks. Will they make a difference with fintechs?
Partnerships are really hard, and it does depend on the type of partnership. I think there's a category of partnerships where it makes sense, but it's really more like a service provider. I will say things like KYC, KYB, identity verification, fraud management, those kinds of things. There are a lot of providers, frankly, the banks already work with. So think of it like credit bureaus or LexisNexis, companies like that. There are more startups coming through that process. Banks need to make it easier to work with them because it takes a long time to get through the third-party process with a big bank. And so a lot of fintechs, a lot of startups don't want to do it because it just takes so much time. On the other hand, true partnerships, Kabbage has been in many partnerships over the years with very large banks. And I think that the biggest challenge that we faced was another one of alignment. The CEO woke up one day and said, we're going to work with fintechs. And then he told his organization, we're going to work with fintechs. And then we did it. And it turned out that none of the other people in the organization wanted to do it because they didn't have an incentive to do so. Their incentives were around don't lose money and meet those goals. It wasn't around how do I test and pilot something to serve a new customer. So I think if a bank wants to make a fintech partnership work, everyone has to be aligned, everyone has to be bought in, and everyone has to have a financial incentive. We all work for money. You have to have a financial incentive to make it work.
So there's kind of a counter theme to convergence that we're seeing in lending and in banking, which is further niching down into very specific communities that have specific needs. So we're seeing banking and lending apps for the barber community, for people of color, for LGBTQ, where there's specific needs there that seem to be best served by in the niche. But then you have the convergence with large firms like, you know, Kabbage servicing SMBs in general. Like, how do you see that playing out? Like, you know, what's Kabbage's ethos towards being a generalist versus being a specialist?
Well, I mean, I think we talked about this earlier. I think we have to do a little bit of both. I mean, you have to serve the customers you need to serve with the products that they need, but don't spend your time focused on things that are extraneous to that ecosystem. I think that is where we've tried to limit the work. There are certainly great offers you can make to your customers from wonderful partners that make it as easy as possible for them to sign up. Trying to own everything, I think you get really distracted, and then you actually wind up turning into a really big bank, because now you're offering all these products and services, some of which make money, some of which don't. You don't even know what some of them are. You don't even know who runs that organization. You don't, I think that is sort of the peril of being a really large financial institution.
I'm at the end of the prepared questions that I have for you. If there are questions in the audience, please hit that Q&A button in your Zoom webinar panel, and we will get them to Kathryn. I guess that means we answered everything. Question about global. A good question. Stuart Kendall was on right before you and talked about the 20 markets that Amex participates in. What's Kabbage's view on going global?
Well, we've been global before, and I'm sure we will be again. So certainly small businesses exist all over the world, and American Express has a very strong footprint in, particular regions globally. And it's our ambition to partner and, not partner, that's the wrong word, but to partner with those groups within American Express to bring this same ecosystem to businesses everywhere. It's part of the same goal we've always had.
Got it. A question came through from Moshe. Given where you are, how do you separate, or do you, between Soho and SMBs?
It's interesting. At Kabbage, we would say no, because the Soho still, and like the sole proprietor, independent contractor, all those folks are still businesses in our view. And in fact, during PPP, we probably served more of those types of businesses than anyone. And we believe they're a really important and valuable part of the economy. Again, back to that 30 million, SMBs, most of whom have, fewer than 10 employees, power half of our non-farm GDP and 2/3 of all new jobs. So it's a really important part of our economy, and that includes Soho.
So we've got a few questions that came for you, and they don't want to let you go, Kathryn. What has the take-up been on the checking account? And are they existing credit customers or mainly new ones?
It's been across the board. Because we launched the checking account before the acquisition, we already had customers coming in who had been our customers previously, who had become customers over PPP. And then now, if any of you are American Express cardholders, especially small business, you might have seen an introduction to the Kabbage checking product or the line of credit product in your email. So we're marketing to existing American Express customers and looking forward to accepting all small business applications. But folks are really excited. That was one of the data points that I didn't mention about customers who are interested in changing checking accounts. In our survey, we found that more than 1/3 of small business leaders changed their financial services provider since the start of 2021. And of the remaining 68% who didn't change, 27% said they would change their business checking account in the next 6 months. So we really think we're going to see a lot more adoption continue to happen as new businesses form and existing businesses make a change.
Couple quick ones, and we're running out of time. Do you work with small farmers? And if not, why not?
Any business that's legal. As long as that farmer's growing legal stuff, we can work with them.
What is Kabbage market share in terms of the number of SMBs you work with?
Well, the data I would be able to provide is pre-transaction. So, if you think we had served 200, well, close to 500, I think, if you include PPP,
Mhm.
1,000 SMBs, and there are 30 million
Mhm.
SMBs. I was an English major, so somebody else can do that math.
um, what's your view on the importance of managing cash flow for small businesses versus credit/lending? And I guess you're feeling towards interest versus fee income and the trade-offs there.
Okay, so lending is just a part of cash flow. It's one way that you get access to capital to manage cash flow. Ideally, I mean, many people, are anxious about taking on credit, which I think is a reasonable concern for a small business. It's great for a business that has cash flow gaps, like the construction industry or like retailers before the holiday. There are lots of times when it makes sense to take on credit rather than sitting on cash for a whole year that you might need later. That's not necessarily the best use of capital. I think of it as the highest yield and lowest cost routing of money.
Got it. Good answer. One last question, and then we'll let you go. Arvind asks more of a product portfolio question. If there's some products that actually go to like zero margins, maybe like checking, are there specific products that are resilient to pricing pressures?
I think borrowing, well, I mean, our checking account doesn't have a fee. So I don't know. I guess people would rather not pay a fee, of course, if they don't have to pay a fee. For lending, I think it depends on the industry. It depends on the complexion, if you will, of that business, their revenue profile. And I think it's really hard to say whether interest versus fee. It's all the same thing at the end of the day. We led the charge on the Smart Box, which was allowing small businesses to be able to compare rates and fees across all types of small business products. And so that includes everything from equipment finance and trade finance to lines of credit to credit cards to installment loans, you name it. And what's important to recognize is that whether you call it interest or whether you call it a fee, it's still money. And businesses need to understand how much money they're going to spend when they borrow and how much they're going to pay over time. So we think that's incredibly important, transparency in pricing.
Kathryn, it's been wonderful talking to you. Thanks for joining us at Convergence.
Thanks a lot. Take care.